Hey guys, what is going on? Shaquan here. So in this video, I'm going to talk about how to find good swing trade setups, what it is that you need, what it is that you need to know, and the tools that you're going to be using. So first thing first, I am a swing trader and a swing trading Forex coach, which means I've niched down in this Forex business. I don't scalp. I don't typically day trade. What I am doing is looking for long-term swing trade setups and setups that we can scale in and scale out as price is moving. So what I'm going to do is show you guys the time frames that I use, the tools that I use, and typically what the average R to R can be depending on the time frames that you're trading. So what we're going to do is use New Zealand dollar. Now, this is a trade that I gave on YouTube and my TradingView platform a while back. So if you guys have been following me, then you've seen me talk about trading New Zealand dollar and AUD New Zealand dollar opposite of one another. I like to create articles when I see certain positions move, especially when they move opposite of one another. And AUD New Zealand and New Zealand dollar are two currency pairs that like to move opposite of one another. As a matter of fact, if you guys want to know how I understand correlations and what I do to find correlating currency pairs that move together and move opposite, I'm going to be going live this week. So make sure you guys stay tuned to the YouTube channel. If you follow me on Instagram, I'll be posting the day and the time that I'll be going live so you can see the full presentation, because I like to do presentations that you can actually see. Okay. So let's go ahead and talk about this currency pair. New Zealand dollar just hit first take profits for us last week. So I think this setup is best seen on the weekly time frame. One of the things that I love to teach when you first come into the market is what is the analyzing time frame. And this is the time frame you can see everything clearly. There's no confusion, no misconception. I mean, you see everything clear as day. So if we go to the weekly time frame, there are less candlesticks and the candlesticks are bigger. And so I want you guys to understand that part right there, because it's going to make more sense the reason why the risk to reward is going to look the way it looks. So I wanted to take a trade from my estimation zone. Now, the estimation zone is per my strategy. You're not going to hear anyone on YouTube or Instagram or whatever mention this, because I've created that term. Estimation zone is basically where we estimate what price can go before we enter the trade. This is us fighting for the best price. Now, I heard the term fighting for your best price by SMB Capital. They're a prop firm out in New York, and they teach people how to they actually are proprietary members who actually help people learn how to trade, and they give people money to trade for them, their actual funds. Okay, but I heard the term fight for your best price, and I've always loved it ever since. They're not really into forex, they're more into stocks. So if you guys want to look and check out a great YouTube channel, check those guys out. Okay, but I like to fight for my best price. And that's where I came up with the term estimation zone, to estimate where I want price to go. Okay. So if you guys can just rock with me for a second, you guys saw that we had a lower low here at 0.62166. 0.65773 was the lower high, and then 0.60602 was a lower low. The moment we saw this lower low, this is when I'm already establishing I want to be the seller, but I don't want to be the seller from down here. I need price to pull back. So waiting patiently, we can finally see that price was able to pull back to the estimation zone. Great. This is where I know I want to take the trade, okay? Because I see a clear trend in price came back to my estimation zone on the weekly time frame. That's one. What I also know is, because I'm looking at the weekly time frame, my stop loss is going to be quite wide, but my take profit is going to be beautiful. Why? Look how far price had to pull back to go to that estimation zone. Now look how far back it needs to travel to get back down to the lows, okay? Which also means the distance between my lower high and where I wanted price to go, that distance is 114, around 116 pips. Going to put up to the high here, really accurate. 116 pips, which means I'm going to have that wide of a stop loss because the information is on the weekly time frame. When people come into consultation calls with me, when they want me to teach them how to trade, the one thing they say is, Shaquan, I think I'm putting a tight stop loss. They're not understanding where to place the stop loss. And it's based on time frames, right? It's based on where you got the information from. Because I'm getting all of this information on the weekly time frame, I know I cannot have a tight stop loss, because price can play anywhere between the range, between the distance of where I want to enter the trade and the distance of where I don't want price to go. You guys see where I say here that price needs to stay below 0.65773. That is because I am understanding I don't want price to touch this number. That is the distance in which I'm going to place my stop loss, so I am clear and in the safe just in case price pulls back. But the distance to get back down to that low is 401 pips, which means I'm going to hold this trade until I reach my maximum amount of pips. And that's what we were able to do. Okay. This is a part of swing trading. Remember, you have to want to hold the trade first. As a mom, I am a Forex mom. I am a mom in real life. My husband is in the military. He has contracting jobs as well. And he's going a lot, which means I'm at home with my children, which means I don't typically in the morning or after they get home from school around 2 have time to sit on my charts all the time, right? And so I want to make sure I can hold trades. I don't want to miss the setups in between, but I also know I don't want to overwhelm myself coming back and forth to the charts. And if this is you, if you feel overwhelmed, if you feel burnt out, if you feel like you're looking at too much, then you may want to consider being a swing trader, a person who can hold their positions so you don't have to worry about frustrating yourself on every single fluctuation and move that occurs. Okay. So, with that being said, I already know my risk to reward looks like. If I'm risking around 116 pips, which that could actually change when we drop down, and you guys are going to see it change, but that also means that my R to R is going to be more than a 1-to-1. So, I know where I wanted to enter the trade. Let's go back down to the daily time frame. So, I ended up entering this trade after this rejection candle hammer, because when price touched my zone, it gave a rejection candle, beautiful rejection candle, and then this bearish candle here. Now, this was on a Friday when this candle was created and formed. And then this was on a Monday. I decided to enter on a Monday candle when I saw that price was going in my favor. This is called being a conservative trader. If I was a little bit more aggressive, I would have entered on the first candle or the second candle before entering on this candle, because sometimes I feel like we chase price. But this is why I'm learning how to set more pending orders so I don't have to make the decision of which will be the best candlestick. I think sometimes when we try to find what would be the best, we actually end up chasing price. And I don't think that's something that we always want to do. So I'm learning how to kind of just release the emotional side of trading. And if I see the setup, put the pending order on the setup and let the setup work for me. You guys can see how this could work out in the future once I show you guys another potential trade that you guys could have taken on this pair as well. So, the risk to reward at this time of entering, there were two take profits here. Going back down to the low, the first one was a 1.44 because we entered away from the estimation zone. And that's not a bad risk to reward, especially when we think about what am I gaining from holding this trade? And what I've gained was time back into my life to go and live life, to run errands, to pay bills, to go to a coffee shop if I wanted, to take a nap if I wanted, to take a small day venture if I wanted, right? That is the time that I get back. If my kids are out of school, I get to spend that time with them. I don't have to worry about staying on the charts. Like today is Labor Day weekend. Instead of me being on my charts, guess what I'm doing? I'm getting to spend that. Well, I'm talking to you guys, and I had a session, but I get to do what I need to do versus, just watching the charts all day, right? It's kind of like the spin off there. But the second take profit is something that is more valuable, which this TP and this risk to reward is a 2.1. So risking 211 pips to gain 445 pips, right? And I'm going to double the money that I put into the account to make the money there. Now, this is how the trades could go, and they went this way. But let's talk about managing the positions and the tools that I'm using. I'm using price note tools and just a regular rectangle tool. As you guys can see, the chart is clean. The chart is clear. There's nothing else on the charts. There's no other levels in between. And one of the reasons why this is very important is because I don't want to cap my money. And what I mean is sometimes when you have too much on your chart, you have a lot more trading decisions to make, and you can actually make those same trading decisions without having anything else on your chart to affect it. Okay. And so if I had all those other things on my chart, I would get out the trade, then get back in, get out, then get back in. Sometimes I think that is the confusion part, because we as humans can make too many decisions in the mind, right? But I'll talk about that as price moves. What you guys also see on my chart is BE, TP1, TP2. This is important because the take profit 1 and take profit 2 just basically say, hey, when price hits take profit, it could potentially move down to take profit 2. Now that we've hit TP1, I'm hoping price can continue to move down to TP2, which it looks like it could, because we're in a narrow condition here, or a high volatile condition. Price is just waving and flowing, and you will see it better on a lower time frame. But the break even point is more important for managing the trades. So when price got here to my break even point, which basically said when price moves halfway to first TP1, move the stop loss down to break even. So this is where I'm giving myself time to let price move, but also I'm giving myself a reason to let the trade be risk free, because we're halfway to TP1. So that's why you guys see that there. Now let's drop down to a lower time frame for extra positions here. On the 12-hour time frame, you guys can see here where price made a new low, and then a lower high, and then a lower low on the 12-hour. This is where we're going to keep the same rules, and we're actually, we could have entered the trade again. Now, if you saw my video last week, you saw that this was a potential trade that I wanted to enter, and there was a trade on USD CAD, but I did not enter those. Once again, I need to get better at setting my pending orders. But then the trades did run in our favor, and now we have a new lower low made, another lower high, and guess what I did this time? I set a pending order so that I can enter the trade. Okay, and hopefully it pushes back up to put me into the trade. If not, it's all good. We still have time to enter the trade. But you guys see how I don't have any levels or anything moving to the left. I'm literally sticking with where price is, and I want you guys to think about why I do this and how you can do this as well. We're trading for future price. Price back here has already moved. If I wanted to take trades back then, I would have still been trading based on these areas, but these areas have already played out. These are the new fluctuations, the new kids on the block. I need to get to know these new kids on the block, because they're going to become past information as well. But as price continues to make ebbs and flows in current price movements, I'm going to be able to use the same technique over and over and over, without adding a strategy, without adding a trend line, without adding more zones. I get to just play with these fluctuations. I get to know where my stop loss is going to go exactly, and where my take profit is going to go exactly, just like how we did this last trade here. We knew that we were playing in between a 12-hour range, between where my estimation zone was and where I did not want price to go, which was back here to 0.62507, which means my stop loss can be as high as 74 pips. The take profit going back down to the low was not favorable. And sometimes when your trade is not favorable, which is why you need to follow current price action, just adding the fib tool would have made it more favorable. So now I can get a more than 1-to-1. So risking 74 pips to, in this trade, gain 112 pips here. That pending order would have been very beautiful, right? But we're going to turn around and do the same thing in this trade here. Okay. What this is, you guys, is just keeping the platform simple, keeping your business simple, your structure of business simple, right? So far in the last few weeks, with people getting into private sessions with me, especially fix my strategy sessions, people who don't even trade my technique, I've been able to help them gain hundreds of thousands of dollars in 1 week with very small accounts. And one of the reasons I've been able to do this is because, for one, I'm looking at what they're trading. I'm looking at the mistakes that they're making. I'm looking at how they're over trading, but I'm also looking at where they're not entering their trades accurately. It's saying, hey, if you just do this one thing, fix this one thing, place your TP here and your stop loss here, and then do a mindset renewal, you'll be able to make the money that you deserve, and in less trades and then less decisions, as you guys see me do here. Start with this analyzing time frame, because you could have it right or wrong, but then just do these two simple things here, and you got it. And they're able to say yes and hold their trades. and enter those trades. And that's what I want you to be able to do. And so if you need a fix my strategy session, link down below. Or if you want to be able to work with me, set up a discovery call. I'd love to work with you. Let me get into your mindset really quick, okay? So you guys enjoy your holiday, and I'll talk to you guys later. Be blessed.